The other big story of the day, obviously, has been the rupee's slip and slide. So let's bring that chart back up. The low came to closer to around 90, 28, 29 almost. And from there, it's pulled back a little bit. Latha is here. Latha, I'm sure the last 24 hours have been a complete whirlwind for you as well. Dealers, rupee experts, onshore, offshore. What sense did you make of all of it?
Well, actually, the rupee has been falling from November 18th, the day when the trade deficit for October was announced, and it was an all-time high of $41 billion. Since then, the fact that the trade deal hasn't come has kept rupee bears up and about. And we saw a huge fall today, more because of the psychological 90 rupees per dollar barrier getting crossed. Though technically it's just one other number, but it was a good 1% or an over 0.5% fall today. The point is now in late trade, it appears like there is selling exhaustion. I mean, it's a typical way in which how bear markets normally end. I hope I'm not speaking too soon. But how much will you sell on the same news? And the market, came to terms with the idea that we can't go on selling at this point, and they have probably taken this protection from that statement that the CEA made, that the government is not losing sleep over the rupee's fall, and probably this is the best time for it to fall because there are tariff walls coming up, and this makes us even more competitive, was what he seemed to be hinting. And the important point to note is that the RBI was supplying dollars earlier in the day, but at no point it was supporting a level or protecting a level. It was, the selling intensity was always very weak of dollars, but it let the market find its own level. The recovery from 90.29 to 90.11 or thereabouts has not come because of a huge supply by the Reserve Bank, but because the market appears to think that we have done enough, and there has been a long dollar unwinding and probably covering of rupee shorts, or maybe even exporters coming in and selling at that 90.29 level. That is very important, that the market takes cognizance and there is an exhaustion of selling. The market is now convinced that RBI is of the view that we should allow the market to correct itself. A cheaper rupee is good because it will mean lower trade deficit. Exports will become more attractive, and more importantly, the economy gets protection from imports. I mean, you can ask steel, since we were discussing steel earlier today. For a steel company in India, nothing is as good as a rupee depreciation because Chinese steel becomes, imports become expensive. So the market needs to veer around to the view that a falling rupee is not bad. President Trump has been asking for the dollar to come down to 90 or 89 or thereabouts. His big complaint was that the dollar was expensive. And likewise, a falling rupee actually is a protection to the economy. It is not just, IT stocks or specific stocks. For the economy as a whole, it's a protection. It is almost like a rate cut.
I wonder if President Trump is watching the rupees fall today, and then if he understands the FX markets and what you just said, then he might be thinking, oh, is this some other way
of... We call it currency manipulation.
Yes, exactly. So we're trying to preempt the next set of posts on social media platforms. But thank you very much for explaining that to us, Latha. So there we have it, the Indian rupee, and it seems to have found some sort of a semblance. There's no runaway move to 91. The market seems to be fairly balanced, at least at this point in time. But